Good morning, traders. Richard and a quick Ichimoku Cloud Chart market review of the Nasdaq Composite Index, the Nasdaq 100 Index, the Nasdaq Equal Weighted Index, and then the Nasdaq 100 excluding tech to just get a bit of a big picture feel of the markets. Now, just to recap here, the Nasdaq Composite had a beautiful strong rebound rally from the cloud chart support zone. Here we can see how important that critical support level was, as well as this low here in Q3 of 2025. So problem now is we're slightly a bit extended from the top end of the Ichimoku cloud, so there is downside consolidation risk back down to 24,000. If we look at the daily Ichimoku cloud, takes a second to load. There we go. You can see the strong rebound, got through the turning line, then the standard line, a huge gap up, broke through the cloud chart resistance, and then had a couple of gaps up, a very strong rally. The rally is now a bit extended, as we can see from the top end of the Ichimoku cloud, so there's downside consolidation risk to this 24,000 zone. Now we do expect some form of a Fibonacci retracement just back down to a Fibonacci retracement of about 23.6%. So there's downside risk to retest these old resistance zones, to retest them for support, and then we can expect the rally to continue. So there is a downside risk here that we could see a bit of a consolidation or a digestion of this very, very strong move to the upside. Now just keep a very close eye on your on the market. So in a nutshell, index is a little bit extended now, watching very closely to see if we get a little rebound from the turning line there. But ideally, you'd like to see a bit of a consolidation to digest that move. Next up is the Nasdaq 100. Very strong move there after rebounding from this old cloud chart support levels. Huge gap up, broke through the cloud chart resistance, broke through this resistance zone 26,173. Now there is downside risk. Watch out to see if the index will pull back to the turning line of the standard line, the turning line of the cloud, and then the standard line needs to catch up to this level there. So there is consolidation risk once again as well. If we pop in a Fibonacci retracement in there, then we can see where this downside risk level is towards. It's about just above the old highs there. So that's the downside risk for the for May, a consolidation in May. So keep a very close eye out on it. But the good news is we're back above the top end of the Ichimoku cloud. So we're back in a bullish zone on the Nasdaq 100. Now the Nasdaq equal weighted is also very strong there. Very strong move there. So two levels to watch out for is this zone here, downside consolidation to that zone, as well as this 8,913. So we could see it pull back a little bit just to consolidate and digest this very strong move. And also a bit of a risk here with a couple of gaps here, so we can expect these gaps to close. Let's put a Fibonacci retracement in there, and then we can see where we're going to have a bit of a pullback towards. There we go. So you can see there the 23.6%, which would be a healthy pullback in a uptrend in a strong market. 38% retracements just above the top end of the cloud there. That can also be a fairly moderate pullback, but a 23.6 would be kind of a normal pullback to retest these old highs for support. So watch out, watch that very closely. But overall, the equal weighted index also putting in a very strong performance in the index. Now the risk factor is here in the Nasdaq 100 excluding tech is still bearish, so keep that in the back of your mind. We're not out the woods yet in terms of a excluding the tech side. So you can see this rebound rally was largely driven by the Mag 7 stocks as well, and you can see the Nasdaq 100 excluding tech has got a bit of a resistance here to get through at the top in the cloud. Watching very closely to see if it will rebound from the standard line here and then make another attempt at breaking out. But we are experiencing kind of a Fibonacci retracement there. You can see from this move to that high, that's a 23, that's a 38%, almost a 50% retracement. So if we get a rebound from that zone there, and then another attempt to break past the top end and bottom end cloud chart resistance. So that's the risk factor in the Nasdaq 100 excluding tech is that the rally is not that healthy if you just look under the hood. So keep that in mind. That's a significant risk factor. But back to the Nasdaq Composite, so far so good. Downside risk, Fibonacci retracement, pullback down to 23.6 or roughly 24,000 zone. Watch out for Nvidia's earnings coming out in a couple of a week's time. That could also help to drive the market higher if it meets expectations. Until next time, happy cloud chart trading. Thank you for watching, and bye for now.